Hey, what's up? Welcome to DGenEd. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts. And so this is pre-market prep for Thursday, June 5th. Going to be taking you through the usual tickers, which includes the volatility index, the S&P 500, as well as Bitcoin and Ethereum. But then I will also be getting into a few tickers that stand out to me or stood out to me yesterday. One of those being Lithium Americas, ticker symbol LAC. Then I'll be getting into Hertz Global Car Rentals. That's the H ticker symbol HTZ. Then I'll be doing Unity Software and then closing out with ChargePoint ticker symbol CHPT, who reported earnings yesterday after the earnings. And then I will open up the chat to check out, if there are any requests for the hour. But yeah, so let's get into the tickers over here starting with, of course, the UVIX. This is the 2X long VIX futures ETF, which closed yesterday down 0.69%. So maybe that's a good luck sign, but down to $27.20. Currently trading a little bit lower in the pre-market, down to around $27.13, having hit a low yesterday of exactly $27. Let's see what we can see in the chart here is that we do have, this consolidation over the course of, almost a month. This goes back to this gap down was following the trading day of May 9th. So yeah, just about a month ago, gap down consolidation over here. And so really just taking a step back, that could be a bear flag that would be breaking to the downside, which would mean upside in the markets. And we can also see that following this downside move, we had lower volume over here, higher volume over here. So that does make me think that this could be going lower. So I personally am eyeing $25. But I do have this alert, as I have mentioned, at $27, and that was the low for yesterday, and that was actually tested with this Pierce over here at 26.23. That was the low on May 13th, and it does look like I have a Fibonacci extension drawn from that, and that would be suggesting further downside to around 11.53. However, one thing you might notice is I did not extend that all the way to the top over here, so I might actually just zoom in on the chart to do that real quick, and then that would give us an updated level to the downside. So it was at 11.53. Let's just make sure that is lined up correctly. So May 23rd, what was the high? Looks like the high was 35.97. So just going to make sure that's right here. 35.97, 26.23. And then 44.99 is that first point high. So let's make sure that's correct. 44.99. So yeah, that does look good. Let's see where that'd be taking us to the downside. That'd actually be suggesting 17.21, so not as bad as that, $11.52. I forget the number that I said. So yeah, 25, if we do break below that, maybe the next level is 17.21. As I've mentioned before, I do have a small position in the UVIX, but I'm not getting too aggressive. Do plan to add a little bit more at $25 if it does get tested, but this really is just a hedge for if and when we do see a massive pullback in the markets, or even just a moderate one. This will serve as a nice way to be able to take profits on the downside in the market. So then with this, take profits, roll those profits into the dips in other positions. So, this is really not designed to be an exciting trade or anything like that. Although, we do see these massive spikes in the UVIX. And so as we do trade within this parallel channel, which we are in currently, I do think that there is some upside potential with that. And even just from where we're at now, right around 27, getting up to the top of that channel, that downtrending level there, that would represent, let's see, an upside move of over 20%. So I think that's pretty nice. Although I should note my average is right around 32 something, just below 33. So that would actually not be a 20% move for me. That would just be a very small one. And so what I might do is if it does get to be above my average or right around it, I might start to trim some because I did not do that over here, which would have been a good idea just to be able to buy back those shares maybe a little more aggressively, maybe at 27 on these pullbacks. But anyways, yeah, before I do flip over to the VIX, just to get a little bit more detail on the volatility, I'm just going to look over here at the 10-minute time frame so we can look at how the UVIX traded following yesterday's pre-market prep. So yesterday during pre-market prep, we did see this spike up. That was corresponding with, I believe, job openings or some kind of economic data. I'm not really sure. Actually, no, it wouldn't have been job openings. I forget what it was, but we did see a pullback in the markets, and that corresponded with a spike in the volatility. But then we did quickly retrace to those lows from the pre-market and actually hit that low of $27 during market hours. And then since then, actually, I should also note we did hit a high of $27.73. So really just in that $1 range between 27 and 28. During the after hours and into the overnight, we did float up, or really just kind of held where we were at. But then right at the end of the overnight trading did start to pull back some. So I would imagine the market was rallying here and then, getting a bounce. But not really going too far, pulling back some in the pre-market. So we'll have to see where this takes us during the day. I suspect this will be testing $27 and eventually be coming down to 25, if not maybe 17 down there at that Fibonacci extension. So good to be prepared for that. And but now let's move on to the next one, which is the VIX. This is the market volatility index that the UVIX is based on. And so the VIX did close down about 0.5%, so 0.45%, whereas the UVIX was down 0.69%. So the VIX down a little bit less, closing at a price of $17.61. So what we can see here, no volume on the chart, but I did discuss looking at the UVIX that the volume has been a little bit more elevated as we've been consolidating here. That makes me think that this could be a distribution, that this is going to be breaking lower, but we'll have to see. And let's just looking at this, I don't really have too much to add. We do have, I forgot to mention this with the UVIX, we do have higher lows being formed. So the low over here on May 16th was 17.15, whereas yesterday's low was 17.41, so higher lows. So maybe that's a good sign that this is holding those levels. Although I do have an alert here at $17, we will see if we test that. And on the note of higher lows, just want to show that with the UVIX over here. This is actually on the 13th. We had a low of 26.23, but the low from yesterday was 27. So higher lows, maybe that's a good sign, but maybe those those prior lows will be taken out today. So we will have to wait and see. As and another thing that is notable to pay attention to is this gap over here at 21.90 that was formed based on the closing price from May 9th. That was filled with the VIX, whereas with the UVIX that has not yet been filled. But the real signal, in my view, is not the UVIX, it's the VIX. So that makes me think, these levels were tested, got rejected from them. So I think that this is probably going to be cooling off some more. So good to be bracing for that. And with that being said, if these are pulling back, that does mean I think that the stock market will be going higher. So let's take a quick look over here at the SPY, which is the S&P 500 tracking ETF that closed at a price of $595.93. Would have been really cool if it was 595.95, repeating numbers, fun to, gotta have some fun with the charts and stuff. Otherwise, just numbers, it's boring. But yeah, almost that, not quite. Down 0.03% on the day, but getting a bounce in the pre-market up 0.1% or around 60 cents. Currently trading around $596.50 there. And so what we can see is, putting in a higher high over here, that does, although good to be cautious of this, correspond with a lower high in the RSI. So that is bearish divergence. It does look like we got like a little bit of a spinning top there. Did get a wick above the high from the 3rd, so that was on Tuesday. But Wednesday did get a wick above that, but could not close above. We actually closed lower, like I said, down 0.03%. So maybe this is starting to suggest we could be seeing a pullback, maybe down to around 589, 590. Test that as support, maybe even coming down to around 580. We do have some gaps to the downside, as I have highlighted here. We also have a number of levels converging right around $570. So I could definitely see a pullback. So maybe that is to happen, but I suspect that will be short term. I do think that this will be going above $600 a share, whether that's this week, only 2 days left in the trading week. If not this week, maybe next week. And then I think that we could be taking out these all-time highs, which were hit on February 19th, and that was at a price of $611.39. Maybe by the end of June, we start to hit new all-time highs. And also, I think that would be kind of contrary to, I was just hearing this yesterday, the idea of, sell in May and go away, that markets are really not too exciting in the summer months. But that kind of makes me think, well, if that's what everybody's expecting, maybe the exact opposite will happen. And so just like in December of last year, in November and December, we're expecting a Santa Claus rally, and we actually saw kind of the exact opposite happen. So maybe we actually see some exciting activity in the summer months. Maybe we see new all-time highs. So who knows? But yeah, I do think that a pullback to around 570 is possible. And I do think getting to 600 by the end of this week, closing above 600, I think that would be an exciting thing. But really, the signal that we want to be looking at is going to be the SPX, which is the S&P 500 index that the SPY is based on. And so this did close at a price of $5,970.81, being up a whopping 0.01% on the day. So really nothing too crazy there. Effectively flat, just like the SPY, although the SPY did go down 0.03%. The SPX, like I said, up 0.01%. Really nothing too crazy. But does look like, it was a red candle. So we did open higher than we closed. We closed lower than we opened, but we did close just slightly, 1 cent, which is nothing. Relative to, this amount here. Sorry, not 1 cent, 44 cents, 0.01% above, the close from Tuesday. And we did put in higher highs. While there is no volume here, we do have the RSI that is a lower high, so that is bearish divergence. So I do think that we could be seeing a little bit of a cool off down to around 5,865, corresponding with this red line, which goes back to kind of like these lows that were good, dip buying levels to be trading off of, getting in, I believe, like 5% swings there, 3%, 3.5% swings. So, kind of a nice level. And that does also kind of go back to this purple downtrend, which was the neckline for that head and shoulders, which led to the measured move, bringing us down to around here before continuing lower. So yeah, I would look for, if this closes the week above 6,000, that's kind of like headline news. Hey, we're back above 6,000. Are we going to be taking out all-time highs? And then I think, kind of the move there is, this is making headlines. This is hitting 6,000. Oh my gosh, we're really in a bull market. That bear market was over so fast. People start piling into this above 6,000. And then we, get, so an upside move to 6,000, not this dramatic. I should redraw that. Probably get an upside move to just over 6,000. People get excited. They start buying the top, and then we get rugged down to 5,700. Then people say, oh, well, the bear market has to be back on. But then we bounce to a rip your face off rally to put in new highs on the chart, which would actually extend a little bit high. That actually does measure up quite nicely. Where the cursor is around $6,157.25, just above, about $10 above the all-time highs hit here on February 19th, just like the SPY, which was at a price of $6,147.43. So I could see this week getting up to, just 2 days left, so maybe it takes a little bit longer, but getting up to 6,000, people getting excited. We're going to be taking out the all-time highs. Then we see, a nice healthy retracement to a confluence of levels here, $5,700. Then we get a bounce. And then take off to new all-time highs. Just like which I go over in Crypto Corner Sat Stacker over here. There were posts about, but I thought it was a bear market. I sold, at the bottom, and then it started to rally. So it's always, trying to, get the best of us, the market. So good to be vigilant and not be buying the headlines, be, thinking about what they are signaling to us. But then anyways, now, talking about the stock market, let's look over at Bitcoin real quick. Currently trading around 105,420, right around there. So maybe that's a good sign, good omen. We do have what looks like, in my view, potentially a bear flag. So I do think that this could be heading down to around 102, somewhere like that. And I might actually, delete this retracement, because I should be probably extending that higher up here. But, I think it's just a lot of clutter on the chart, and I actually don't like looking at Bitcoin much over here in Webull. I think it's a little bit better to be looking at it over here in a trading view. So what we could see is, maybe what we have here is, maybe we've got this little head and shoulders pattern. And so that might be getting people to think that this is going to be breaking down, going lower. Maybe we retest, 102. Maybe we come down to sub 100. People get really bearish, but then we rip faces off to the upside. So I am excited for some potential downside on Bitcoin. 102, I think that's going to be a notable level. I think a lot of people will be wanting to be buying Bitcoin down below 100,000, but maybe we don't get there. Maybe that's, like the little lure, or like the little trap that people get excited about. They're waiting for, I'm going to buy at $99,999.99 because I just want to get below 100,000. I want to be able to say that I did. And then that never happens. Those people get left behind. So I do think that there will be a pullback, but I think that that is probably going to be a bear trap before we go up to take out new all-time highs. Maybe getting to around 115, 120 on this next move to the upside, but I do think that there is going to be further upside beyond that by the end of the year. So I do think that it is good to be taking advantage of dips. At least that's what I am doing with daily dollar cost averaging, and I do have a dip buy placed at 2,000, not 2,000. Actually, no, with Bitcoin, I do have a dip buy placed, but a very small one at 102,000. The dip buy that I'm really excited about is actually with Ethereum. So I am just going to pull that up here. And let's see, got these levels that I've drawn here. It's been consolidating really nicely, showing, in my view, a lot of relative strength relative to Bitcoin because Ethereum is still trading above $2,500. That has really seemed to act as the support level, getting some wicks below it over here, really just being the green line, the base of that parallel channel there. And that corresponding, with those lows there. But I do think that we could get a sweep of those lows with the low from May 18th being at a price I've talked about it a number of times. I've got it memorized now, $2,323 or 2323, just below 2,350. So I do have a dip buy placed for an accumulation of a weekly dip buys. So I do daily dip buys for Ethereum and Bitcoin as well as other cryptos, but Bitcoin and Ethereum are my biggest daily dip buys. And so I have an order placed 2,350 for the amount that I would buy in a week in Ethereum. But, I get paid tomorrow and I plan on adding another one of those weekly dip buys at 2,400 just in case we don't get all the way to this level, or maybe we do, but that order doesn't get filled just because of the spread. That may not happen. So 2,400, and that also corresponding pretty nicely with this Fibonacci retracement that I have here. So going from the low over here up to the high up here, we can see that the 382 is right around $2,385, or right around 2,400. So if 2,350 doesn't get filled, I'll at least get filled up there. And if it does go lower, I'll just be happy to add. I think that ETH is probably going back to 4,000 by the end of this year, and I think it could possibly get up to around 8,000. So feeling pretty excited about that. But yeah, let's come back to the charts here. A couple alerts that I got yesterday. One of those was Lithium Americas, which is ticker symbol LAC. Talked about this a few times on the channel. And let's see, got some clutter on the chart here. So maybe I want to clean that up a little bit, or maybe this is highlighting some confluence of levels. So what we have from this retracement going from the low of April 8th up to the high of May 12th. We do have the 618, the 61.8% retracement coming down to around 269. 270. And then we also have in light blue here the 786 retracement coming down to again 270, and that is the bigger picture 786 retracement here, although that has been tested multiple times. It has been broken below. So just to kind of clear up some of that clutter, while it is pretty cool, there's a confluence of levels, there are some other levels right around there, and we have broken below this, so I'm actually going to delete that just to clean up the chart. You can't fall in love with the levels on the charts. And so we do have, let's see, this level here going across around 275. That is where I had the alert, and we did get above that, but we did close below at 271. And so, I had been thinking that if, price goes up here, pulls back to that 618, maybe that's a dip buying opportunity. So, I'm kind of intrigued by that. But then what happened is it bounced, didn't really go that much higher. And so now I'm a little bit concerned that this is bearish consolidation. And actually, it's a little bit cluttered here, but what we can see is if I just draw, a trend line here from this low, we have, consolidation above that, and, wicks not even getting to that level. Maybe I move this over to here. And yeah, so from, let's see, let's just make this nice and thick. And I'm just going to make it, I wish there was pink on here just for it to stand out a lot. But yeah, I'll just do purple there. What we can see is, the opening price here on May 22nd. Then we got some wicks down to that level, closing basically at that uptrend on let's see, May 29th. And then we get a wick up to that level yesterday, got rejected, pulled back. So that makes me think that, yeah, this is not necessarily looking like such a great chart. Like this could be pulling back. And so with that being said, maybe this green line that I have marked there, maybe I want to change that to yellow or maybe orange, that I think that is potentially acting as resistance, and that we could be heading lower. So I actually don't think that this is a good buy right now. And I could, of course, be wrong with this, but it just doesn't look like I'm not too compelled by this chart. Maybe it goes up, but maybe it doesn't. Maybe it continues to get rejected. And so what I would like to do is actually add, I'm actually going to make this light blue so it stands out. I thought this was a level there, but it's not. It's just a white line. I'm going to make this light blue so it stands out. And then I will add the 786 so we could see where that would go. And so that's around 252. I am going to delete this level here just because, 243, whatever. And yeah, with this, I do have other levels that kind of correspond with where we've been trading at. I guess we're technically above 269.2, which is that 618. But just to get rid of some of the clutter, I'm actually just going to remove that level. My thesis now with LAC is that this is probably going down to, let's see, 255, let's say. But I think it could actually be going down to 250. So what I might do is change this to be below. Actually, no, maybe I want to leave that one as above. Then I'll add an alert below 255, and then I will put another alert, kind of redundant here, but just so I'm aware that, yeah, no, if it does go below 255, maybe I'd want to do a buy order at 250, save that. So I got those alerts down there, really just kind of like straddling that 786 there. And maybe, what could happen there as we get a bounce up to this level. And that could be, a 10% move going up to that orange uptrend, maybe getting rejected there. So, I think that could be a nice swing. But then ultimately, if it does get rejected, it could be coming down to around 223, 221 or so, where we do have that blue dashed line. That is a gap that has yet to be filled. But I've seen it many times. Maybe we don't actually fill that gap. Maybe that's just, kind of like a little, carrot for bears to be, going after, but it doesn't go all the way down there, and then those bears get left behind. So, I think that this is a little risky at this point. It does seem to be a little weak. I would have liked to see, when coming down to this level, I would have liked to see a move from here down and then bounce, like a V-shaped recovery. We did not see that. Weak bounce, looks like a bear flag pulling back. So that's my thesis there. And then so another one that I did get an alert on, I've actually gotten multiple alerts on this. This is Hertz, the Hertz alerts. Hertz closed yesterday at a price of $6.07, down 1.78% on the day. And so the alert that I've had, actually when we were up here, I don't know that I did a video on it. Maybe I covered it in one of these streams, or maybe it was during Ticker Request Live. That might actually be it. When it was up here, I'm not sure if I drew this red box then. Might be, just thinking that, there's some consolidation there. And then there's also this downtrend, which let's look at the weekly to see that. Yeah, so that seems like a pretty notable trend line that we have failed to get above. But this is actually pretty intriguing looking at it like this. This makes me think that this could be a bull flag, consolidating lower here, and a way that we can get an idea of where this could be going. We could actually do this a couple of different ways. So, we could draw it from the low here to the high, and then a pullback here that would suggest kind of the upside target. I'm going to make that light blue so we can see it a little bit, differentiated against these white lines here. So if I do take a step back, that would be suggesting price could be getting up to around 1243. So that's more than a doubling in price. But what might be a better way to draw that is actually from the lows over here. After we've seen this kind of volatility, really we started to consolidate here from the bottom. So maybe that's a better way to draw it. Just want to see the red one there. That's at 325. So let's just move this to the tail of that candle there at 325. Then going up to, let's see, 939. And then back to this low of 551.39. Okay, so those are all good. Just going to lock that into place. So let's see where that 100% move would take us. That's up to around 1164. So still, right around 100% move to the upside. Although we have seen this upside move, and we see this big red candle. Maybe this is actually a bear flag. So another way that I could draw that is by going from the highs here to the lows here, and then so an extension, but to the downside, that would be projecting a price target of around 374, maybe around $4. Maybe the tops over here acting as some support, that would be around 440. That maybe this could be heading down that way. So actually, on the weekly, I'm not sure. Is this a bull flag, a bullish pattern, or maybe a bear flag, a bearish pattern? And let's see. I'm just going to flip back over to the daily, and so we can kind of see what's going on over here. This makes me think that this is more likely, I don't know, let's see. We can draw some trend lines here, just going from the open on April 23rd, going through, the close and open back on, let's see, May 27th and 8th. Just thinking, that's kind of a resistance level. And then over here, basically the same kind of idea with those levels over here. This, it's maybe not, we don't have a really good idea of what the bottom could be over here. Maybe I want to extend this over this way to like the highs here just to get an idea. Maybe it's at support right now. And let's just consider the volume, what we see in that is on the upside move. We did have a pretty massive surge in volume, gap up. And let's see, have we filled that gap? I do believe we have. The closing price on April 16th was 571. And let's see, want to make that a dashed line, make that blue so we know it's a gap. That was filled, so I can make that a solid line. We see that filled there. But yeah, we have been putting in higher lows, so we'll see if we take those out, and maybe I'd want to, well, $6. Let's see, maybe what's the low over here? The low over here, 551. So really, we don't want to be going below 551. So let's see, let's go above $6, or let's see, maybe above 650. And then let's add an alert here for below 550. And if we do get down to 550, that would be kind of like a bearish sign. If we do get a break above 650, that would correspond with, testing the upside of that line here. So maybe that would suggest a breakout. And then what we might want to look at, I'm just going to doodle this up here so I kind of have notes for the next time I cover this. But if we do get a breakout, what we want to see is maybe a rejection corresponding with those prior highs, pullback, retest, find that as support, and then go higher. So that is, what I would like to see with this one. So that is really like the ideal situation. So I'm going to color that green. We will see if that is what happens. And since I think that this could be flipping from resistance to support, I am going to color that yellow just as, kind of a cautionary level. And then this one is going to be red, because if we do go below that, I think we could be heading down to around, unfortunately, $4. So good to keep that in mind. And then now let's flip over to the next one on the list. That is going to be Unity Software. This is one I was, scooping up some contracts on this yesterday, dated to expire in January. The strike that I have is $65, so pretty far out of the money. But we can see I'm actually only 10 minutes before the hour, 11 minutes. So I'm not going to dive into it, but the Bronx Viking has been, I'm going to pull it up. Yeah, why not? I can't talk about something and not go over it. Come on. So I did repost some of the Bronx Vikings tweets. I said, be honest, are you buying the dip? I like it a lot. Just having fun with it. No financial advice. There have been some nice posts from the Bronx Viking here, kind of, tinfoil hat theory about, Apple potentially, acquiring or, investing in Unity Software. Also interesting, maybe related to GameStop. We saw the Buck the Bunny come back as a 3D rendering. Maybe that was done by Unity Software. I'm not sure. Could be a nice collab there. We also saw some news. I believe I got this from, the Bronx Viking posting, I believe, Jay Keynes' posts, and that there's some potential a deal made between Unity Software and BMW. So just, lots of stuff. And so Bronx Viking is saying that this is spicy. U has already confirmed as Key Vision Pro developing partner. And so I actually, I had a post. Maybe I want to go to the replies with the Bronx Viking, which I'll get to down here. It's kind of funny. But then also Free Wyckoff is posting U Update Range Analysis, which is potentially, owned by Keith Gill. Maybe he has been buying this. He has had a number of his memes suggesting Unity Software, but, maybe it's just coincidence, I think. That present that he was saying, was the Unity Software logo. So, Free Wyckoff, this is Rico. He is saying that Keith Gill's position will likely cause significant sign of strength back to the $30 to $40 range, with it currently trading around 26. That's looking pretty good. And so the volume in this downtrend, downward sloping range continues to look like a long-term accumulative structure. So long-term, got to be patient. You want to break supply and test that high value area before continuing price discovery upwards. So that would mean, we want to be getting up to this level and then retesting supply here, this downtrend, retesting that supply as support before going higher. I believe that's what he was saying. So the target area of liquidity for sign of strength. So yeah, we need to get back up there, pull back, retest this as support, and then we can launch higher. I believe that he was saying you want to break supply and test that high value area before continuing price discovery upwards. So yeah, I mean, we need to get above there. And then so I reposted this, just replying to a Bronx Viking tinfoil hat theory, just having fun with it, joking around. What if Apple changes the name of iPhone and iMac to like Uphone and UMac after acquisition, and the Vision Pro 2 and the Vision Pro becomes the ICU? I think that would be funny. I don't think that's happening. And that was just replying to this post. And he's had, a number of great posts on Unity Software. So good to check that out. But actually, there was something about, I'm actually going to pull up his page, and then to search it, I could probably just scroll. 6 minutes ago, I'm just going to like that. Unity Software January $30 strike call. So like I said, I have the $65 one, so way out of the money. Seeing a slight decrease, a little bit risky, of 3,124 contracts after yesterday's CTO departure news. I'm just going to ask Grok, what is CTO? And so what is CTO? Grok, I don't need you to do a deep dive. Just the CTO reference is the Chief Technical Officer. Oh, yes, I thought that was a technical thing. I knew that. I had saw that announcement. So yesterday's departure. So he's leaving, or he or she is leaving, so maybe not so great. But open interest still remains over 80,000. So, yeah, I mean, that's not really something to be freaking out about, because we saw, a net increase over the past week. June 2nd, an increase of over 21,000 contracts. Then, balancing here. And then so now this increase in 21,000 minus that's actually going to be around an increase of around 18,000. So still, not looking too bad there. Maybe what we see is a pullback and a retest to this uptrend. That would be around $24. And then maybe we get a bounce to break above, go higher. And so 24, wow, I nailed that. That's where the cursor is, so right around there. And I'm going to delete this doodle so we get a little bit of that clutter off there. Let's see, what's this? High over here. Yeah, I mean, I'm going to make that, I'm just going to make it green. I'm not going to make it thick. I would think that's a nice dip buying level, pullback level. This, let's see, that is a Fibonacci extension. I'm going to delete that. Kind of want to be clearing up some of the clutter here. Yellow line here. Going to delete that. I'm going to put this alert here, which is, I imagine, at 23. Above 23, I'm going to change that to 24, and I'm going to do below, because I think that's going to be a nice level to be getting some at a discount if it does pull back. And for me, I will be doing that $65 January strike contract as well as some shares, but also not doing it too aggressively, as I typically am not too aggressive. And speaking of not being too aggressive, maybe being a little bit aggressive, let's talk about ChargePoint. So we can see here that ChargePoint, ticker symbol CHPT, did close yesterday up a massive 13.16%, going up to 87.34 cents on the day, up over 10 cents. Massive move. I do have this green line marked here because, that was earnings. And so I'm just going to delete that, because we do see that we have gone past earnings. But with that being said, earnings saw a pullback of more than 15%, or right around 15% currently in the pre-market. If we do look over at the 10-minute time frame, we can see that it did go up to a high yesterday of 88.9 cents before a massive sell-off here. Press release, ChargePoint reports first quarter fiscal year 2026 financial results. And I believe their guidance, their forecast, was a little bit weaker than expected. We did see this sell-off right away, right after close, coming down to a low of 72.01 cents. This, to me, on the 10-minute time frame, looks like it could be a bear flag, but I don't really pay too close attention to after hours, overnight, or pre-market trading, really just when the market's open. So I wouldn't put too much weight on that being a bear flag. And so what we can see, I'm just going to read some of these headlines just so I can get kind of a perspective on it. ChargePoint stock is dropping. There aren't enough EVs. that seems like, kind of a BS title. I think that, Tesla has been seeing, kind of like record breaking first quarter sales, I believe. So there's still EVs. I wouldn't worry too much about that. ChargePoint Holding receives hold from Roth MKM. Let's see over here. Goldman Sachs sticks to their sell rating for ChargePoint Holding. So they were bearish. They remain bearish. And then PVH cuts earnings outlook, joins ChargePoint. BitFuFu and other big stocks moving lower Thursday's pre-market session. And there was one that I saw, which was before close yesterday. And let's see. These are highlights. I want this. ChargePoint reports what are key metrics. I saw something from Benzinga, which ChargePoint stocks. No, ChargePoint. These are behind me, but I'm just sees. Let's see. There's one that stood out from Benzinga. Okay, so it does say here, ChargePoint Holdings Q1 adjusted EPS earnings per share is 0.06 cents in line, sales 97.64 million miss, which the 100.53 was the estimate. And let's just keep scrolling down here. Lots of news. Oh, this is the one that I was reading. Cohen, Asnis, Lafont bet on ChargePoint. Will Q1 earnings spark a breakout? I was reading this and it's like, well, maybe I'm wrong. Maybe it's not going to be pulling back. I don't know. But it's like, I'm going to stick to my thesis. And, my thesis was really that this could be running up to $1 before there's an announcement of a reverse split and then things get rugged. I did not expect it to go up this much before earnings. And so this made me think, well, NIO was selling off before earnings and then after earnings bounced, I expect ChargePoint to be pulling back. And so that's kind of, my thesis. I did actually buy a couple puts yesterday. I'll go over those in a minute, but I actually want to go over the chart not in Webull here. I want to look over at it in, TradingView. So I'd gone over this range that had been trading and we got this breakout above this high that we had hit on March 7th. That was at a high of 79.82 cents. Clearly, we did get above that, but that we haven't seen. We did see a close above that, but that was a level that we had been getting rejected at. My understanding is we need to see like 2 closes above. I'm not really that clear on the confirmation signal, but this big move, much higher up than I expected. I expected it to take longer getting up to $1, maybe rallying after earnings. I didn't see that, so I decided to open up a put, which I'll go over that in a minute. But what we can see is in the pre-market, so in orange here, we have retraced to around 75 cents. Maybe we do find this level as support, but I do think that, really within the span of a month, there is going to be an announcement, maybe a little bit longer than that there has to be a reverse split, because based on this being listed on the New York Stock Exchange, in order to maintain compliance or regain compliance, they have to be closing above $1 for 30 consecutive days. And so with that deadline being August 19th for regaining compliance, they need to be closing above $1 by July 20th, because July has 31 days. So that's approximately 30 days before the 19th of August. They need to be closing consecutively above $1 on that day. And that's not happening. So I think that if a month from now they haven't done a reverse split and they're still below $1, that's going to happen. That's inevitable. And I think that's going to drive the price lower. And so I could see the price coming down to this range low, which is right around 56, 57 cents, maybe coming down to 50 cents, maybe lower. Reverse split, maybe they do a 1 for 10, 50 cents would be $5. Could be going even lower than that. Just being, that's my perspective on it. I've seen it happen many times. Reverse splits, stocks go lower. And, this is a sell-off. following earnings. That I think it's probably going to continue. And so the put that I did get, I wasn't planning on doing it, but I didn't expect it to go much higher than 80 cents. And also, something that was asked a while ago on X is, if this is up at $1.50, would I, regret having sold basically all of my position right around 70 cents, which is, right around where the cursor is here. So, no, because it doesn't matter where the price goes to, because if I would have held those shares, I probably would have been like, oh, it's going to get to 90 cents. Ooh, maybe this is it. Maybe it's going to go to $1 after earnings. This just continues. That psychology, it's just like, no, I mean, I made my decision. I don't think this looks good, whether it goes up to $1.50, whether it doesn't, whether it goes up to $1, whether it doesn't. I think that there's going to be a reverse split and that this will be bleeding. I think that it's probably going to go below 50 cents. And so if it goes up to $1.50, it's like a butterfly effect. If I would have held, it would have, tanked way, way more than it did, after earnings. And I would have just, so I think you got to draw the line somewhere, and I drew the line. So no, do I regret it? No. I don't think that this is going up to $1.50. I think it's going down to 50 cents before going up to $1.50. Sorry, but that's just, I don't see that there's a lot of strength here. And so what I did, very small, really just trying to have fun with it. And we can actually pull it up on the chart over here. Kind of exciting. I really like to see the data over here. So this is the 50 cent put that expires in 71 days. So on August 15th, kind of corresponding with the deadline for them to regain compliance. And the thesis is that, I think ChargePoint will go down leading up to and following a reverse split. If there is a reverse split, that kind of makes this this strike a little bit wonky. But, I think if it's adjusted, so it's not that big of a deal, or it would be adjusted. And so I got one of these at 4 cents. So that's, $4 per contract, because each contract represents 100 shares. And so I got an average fill here. One, this is me. I bought one at 4 cents. And then I bought another one over here when there was actually somebody else buying 10. I bought one of those 11 at 3 cents. So I have two of these contracts. I'm risking $7. Just kind of, experimenting with the thesis. And I do have a limit sell order placed on these for 8 cents. So I would get back $8 to put in 7, get back 8, effectively at break even, because with the 7 cents, there's a little bit of fees. I believe I'm actually risking $7.16. So if I get back $8 minus some fees, then, I'm effectively at a little bit above break even. And then I have one contract just to hold, just to see what happens. And so what we can see yesterday, the low was 3 cents, the high was 5. So I got my average, at 3.50. So not so bad there. If we do look back in time, we can see these other these prices for that premium. But what I am going to do is actually look over at the data here, looking at the contracts that I have over here, ChargePoint. And so what we can see is that low was 3 cents. There's not much history on this one. It goes back to a low of 1 cent. So, I'm potentially, this could go to zero. I could lose, all $7. That's not a big deal. I'm just, trying to exercise, getting practice with, following through with the thesis, or putting money on the thesis, even though it's not a lot, it's something. And so I have a limit sell for 8 cents. So I just take that risk off the table, and that would be getting up to like the high over here on May 29th was 8 cents with this volatility. Wow. This is, down 20%. I thought this was the stock over here. So I was looking at the 20%. I was like, whoa, it dropped down some in the pre-market. And then I just, hold the other contract to see, it's a runner, no risk on the table. And so the high for this contract was 17 cents. So maybe, I could see this going from 4 cents to 17 cents, make a nice little profit there. And so that I would be taking basically all of my risk off the table, fill at 8 cents for one of those contracts. And then I could potentially be making, at least 17 cents to the $17, because each contract is 100 shares. So 17 cents times 100, $17. So, just having fun with that, experimenting with that. Oh, and I should note though, what I wanted to do, I forgot to do it. I wanted to buy one more of these contracts right before close at 4 cents, but I was running to work, forgot to place it. And so I wanted to be a little bit more exposed, but I'm talking putting $7 to $11 on this. That's nothing. But just, experimenting with it, having fun, seeing how this contract price changes, because maybe it doesn't get up to 8 cents right away tomorrow, and maybe there's some volatility to the upside. So, I have no idea. But yeah, just coming back to the chart over here, it looks like it's down about 14% in the pre-market, back into the 70 ranges. Maybe that does find some support with that uptrend. I mean, because it does look like it's still above that green uptrend. So yeah, I mean, there's still some hope that it does something like this and then bounces, but then I could see maybe reverse split news comes out and this forms a bear flag following that downside move, and then this comes down, something like that. So yeah, I think it's risky. I've thought it was risky, and I will continue to think it's risky and not worth it unless it's in and out. I think long term it's going to take a long time for this to be making some money, and it could go the way of Fisker. So good to be cautious with that. But I will open up the chat real quick. I put less tickers on this list because I didn't want to be going too long, but I tend to ramble. And so, yeah, Hydra Hustler did go over charge point pretty extensively, so hopefully that's helpful for you. Sorry it took me a little while to get to it. But yeah, I mean, I think that, short term, I think that it's probably pulling back to some support, but we'll have to see. It's going to be gapping down, so, we'll have to follow up on it. I don't know that I'll have too much more of a perspective other than kind of, this being my thesis here, that doodle to filling this gap around 62 cents. I think that we'll need to see how price responds over the next couple of days, maybe see what the weekly close is. So it might be a good one for, Sunday night's video, which will be an overnight market prep. But yeah, with that being said, with it being past the hour, I'm going to throw this up here. And, just as always, those are my thoughts. If you found them helpful, make sure you like the video, share your thoughts in the comments down below, and make sure you subscribe to the channel for more pre-market or overnight market preps. Like this being a pre-market prep. I'll see you in the next one tomorrow morning, and then I'll be doing Crypto Corner Sat Stacker on Saturday. Hopefully you guys have a great Thursday trading. Get outside, enjoy the weather. It's looking like a nice day here, so I'm going to have to spend some time outside. But yeah,